Hello, thank you for being here today to Milgar School of Business Center for Financial Wellness's Build Your Financial Confidence workshop. Today we'll be talking about building your understanding credit and credit score. And today we have members from Sound Credit Union and members from Sound Credit Union who will be providing valuable insights on how to build credit and also how to maintain a strong credit score. And just a little background on Sound Credit Union. Sound Credit Union is a member-owned financial cooperative serving the community since 1940. With a focus on providing personalized finance solutions, they offer a range of services from savings and checking accounts to loans and investment options. They are committed to helping individuals achieve financial wellness. Sound Credit Union is dedicated to supporting its members' long-term financial success, and they are also a valuable partner here at University of Washington Tacoma, sharing their expertise and they're actually sharing their expertise to help you to also achieve financial wellness. And so today I'm just going to hand over the mic to Jen Reese. She is a VP of Public Relations at Sound Credit Union, and she is here today with her team. Thank you.
Thank you. How is everybody? As Hisuk said, my name is Jen Reed. I'm Vice President of Public Relations at Sound Credit Union, and these are my colleagues, Janelle Borseth and Vanessa Kavanaugh, who are experts when it comes to consumer lending. So they work directly with all of our members who are coming in, connecting them with loans that are going to benefit them, looking at their whole portfolio and understanding what's going on in a person's life, right? Because we can look at credit reports and scores as much as we can, but it doesn't tell the person's whole story, right? And that is something that we do as a credit union, is we really want to get to know individuals and understand what's going on in their life, because we can pull a report, but it doesn't tell us the whole history of somebody's life. It just tells us what's been reported. And it's really important that we understand those details. So with that being said, today, we're talking about understanding your credit report and score. So how many of you have pulled your credit report or score before? Excellent. How many of you are monitoring your credit report on a regular basis? Excellent. We're going to go over all of these things today. We're going to talk about why credit is important, which I'm sure a lot of you are figuring out right now, whether it's getting a credit card, looking at an auto loan, car insurance, homeowners or renters insurance if you're renting an apartment. All of those things are important, and your credit report will play a factor in that. What's on your credit report? How many people have ever pulled their credit report and found out that somebody else's information was on their credit report before? That has happened, yeah. That happened to myself. We'll talk about it a little bit later. My husband and I, when we went to buy our first home, ran into that situation. How credit scores are calculated, because it's different between between the three bureaus that we'll discuss today. How to build credit, and then common credit myths, as well as tips for credit cards and how to use them wisely. So that being said, let's go ahead, and as we're going through, we don't want this to be boring. We know how finances can kind of be a boring topic, right? But we can all learn from each other. So if you have a story that you'd like to share, or if you have questions as we're going through everything, don't hesitate to ask. We want this to be an open forum and make sure we all have the chance to learn from each other. So that being said, why is credit important? And for so many different reasons, right? If we're looking to really go out and purchase a vehicle, apartment, just insurance in general, these businesses that are out there are looking at individuals' credit. And it's basically giving them an idea of your credit worthiness, letting them know your history. Are you responsible with the funding that's been given to you? A lot of times when people go out and they get a credit card, nobody ever talks to them about how much of that credit you should utilize. And we're gonna go over that today. For example, if you're given $1,000, should you use all of that credit at one time? No. Your goal is to use 30%, but nobody ever has this conversation with people. So it's really important that you utilize and limit the amount that's been given to you, and if you do use it all, that you pay it back each month and you pay it back on time. All of those are showing representations of how you as an individual are being responsible with the funding that's been given to you, and that you're fulfilling the obligation and the contract that you have with them, that you're paying it back on time and you're being responsible with that money. There we go. Has anybody applied for a job and had them ever look at your credit history before? Yeah. So we sit outside of our offices where our recruiters sit, and as they're interviewing individuals who are applying for jobs at Sound Credit Union, once they're moving forward to becoming an employee at Sound, our staff does a credit check on them to look at, again, it's that characteristic. Are you being responsible with funding that's you've been lent? It's giving us an idea of how responsible you would be as an employee. So it's not just credit that people are looking at, it's that worthiness of an individual and your responsibilities you're taking throughout life. Renting or buying an apartment, as you go and do either, you're going to have to, landlords are going to be looking at your credit to see, are you making your payments on time? That's really important for them to make sure they're getting paid on time, right? So they're looking at those things. As I was saying, when I went to buy my first home, my name's Jennifer Reed, my husband's John Reed. There's way too many of us in the world, and it's really easy for another John Reed to get put on somebody's credit report, and sure enough, that's what happened. So as you can imagine, when you go to buy a home, it's a quick process, especially now, right? It's even quicker than it was when we bought our house in 2002. You have to be ready to go, and if somebody else's credit is on your credit report, it's gonna take time to get that removed. So he had to contact the bureaus and let them know this is not me, and then get that removed for a collections that wasn't supposed to be showing up on his report. So it's just an example of, as you're going through life and you're thinking about making a big purchase, or maybe you want a credit card, if you're keeping an eye on what's going on with your credit report, it'll help you make things move faster and not have to worry about somebody else's things being associated with your own. Getting a loan when you need it. So these ladies can tell you all about that. But again, looking at your credit report, making sure that you have everything in order, making sure that if something has been paid late, if something hasn't been reported right, because you're your own advocate. So if all of a sudden somebody's saying that, identity theft is happening left and right, we hear about it all the time. If somebody goes out and opens a credit card in your name, or God forbid they go and buy a car, because it happens. It literally happens, guys. If you're not monitoring it, it's going to impact you when you go to get a credit card or anything like that. So making sure you're keeping an eye on things for when you're going to get a loan, and making sure that your character has been represented appropriately. So let's look at somebody who is considering getting a credit, or buying a home. So we have Diego and Angela. They're trying to accomplish the same thing. They're looking to purchase a home at $325,000 for a 30-year fixed rate. We look at Diego's credit score, and he's at 660. Angela's at 750. So what we're trying to determine is how that credit score really impacts their monthly payment and overall purchase of the home. So Diego, with his 660 score, got an 8.25 interest rate, and Angela's at 7.63. So honestly, this makes a huge impact, whether it's buying a home or buying a vehicle. I recently just bought a new car, and my credit score is very good, and because I had a high credit score, it lowered my interest rate for me. So same thing here, because Angela's is a higher credit score, her interest rate is down almost 0.75%. That's a lot. In fact, when we look at that in a monthly payment, it's a difference of $100. And when we're seeing people who are struggling to buy food, and we know how expensive life is right now, $100 can make a big difference. So they put down the same down payment, everything, but at the end of the day, look at the difference in how much they're paying. $716,000 versus $675. That's a huge difference because somebody had a better credit score. And those are what you want to think about. Saving $41,000. $41,000 can go a long way. You're all college students right now, right? You see how expensive going to school is. That can really make an impact in somebody's life. Or saving for retirement, right? Instead of that extra $100, you could be putting towards retirement every month versus putting it towards a mortgage and paying it to the bank. So what's on your credit report? And with that, I'm going to turn it over to Janelle.
Good afternoon. So let's move over to credit reports. What is on our credit report, right? It lives with us. It lives forever with us. So first off, our personal information. Personal information is our names, addresses, previous addresses, social securities, birth dates, and anywhere you have worked ever. All this information will live on your credit report for life. So is it used to determine if we're going to lend to you? Absolutely not. It's used to identify you and who you are personally. So let's move over to, that's fine. Okay, so there's 3 different credit bureaus: TransUnion, Experian, and Equifax. They all have the same data. They all work the same, but they are 3 different entities. Any company can determine if they want to use all 3 of these or one of these. Most use one. So at Sound, we use Experian, so I'm very familiar with Experian. But those are the 3 bureaus that they have, and so if you ever hear them, that's what they are. Personal information, that's what I just kind of went over with you on our credit reports, or all the personal information on the credit reports. Credit accounts. What is a credit account? A credit account is something like a Visa credit card, personal loan, auto loan, home loan. Those are all of our personal accounts. Collection accounts. A collection account is something as some creditors actually trying to collect money from you that you're not necessarily making monthly payments to. It could be something like a medical bill that's unpaid, insurance that's left unpaid. Collection accounts will live on your credit report for about 7 to 10 years. So it is very important to pay attention to those and look at those. If you have some sort of credit account, you don't want to ignore it because they affect your score by about 30 points. And public records. Like, what would a public record be? A public record would be something as a bankruptcy, a lien, like a home lien, or a judgment. Like maybe somebody had sued you for an accident where you now owe money to them, but you haven't paid it yet. That goes on your credit report as a public record, and it will live there for the life of that loan, or the life of that judgment. Inquiries. What's an inquiry? It's who has looked at your credit report. Credit reports cannot just be pulled by anybody. You have to give permission. So there's 2 types of inquiries. There's a soft inquiry and a hard inquiry. So if you yourself are applying for a loan and I was to pull your credit, it's going to be a hard inquiry because you've requested me to pull your credit by applying for that loan. There's soft inquiries. A soft inquiry is something that you can do yourself. Credit reports, we'll probably get into this a little bit later, but you can access your credit report for free once a year with annualcreditreport.com. That's a soft pull, so it's recognized that you pulled your credit, but it's not visible to anybody, so nobody can see that. Pre-quals also are a soft pull. You see those are a lot more common now, is pre-qual yourself. It's a very new common way of seeing if you qualify for a loan prior to applying for that loan. It's a soft inquiry. Again, it doesn't affect anybody, and it doesn't actually affect your score. Now, a hard inquiry will affect your score with about 3 points for the first pull and can increasingly decrease your score the more and more you pull it. Inquiries live on your credit report for about 3 years. The more you have, the worse it looks. It looks like you're out there just trying to pull credit, see where you can get, and it just doesn't look good. And it will actually red flag a credit report to say too many inquiries. And then it will actually not give you any kind of instant approval, and there'll be further credit inquiries from that financial institution on what you are doing and why you have pulled your credit so many times.
If I can interrupt for just 1 second. So annualcreditreport.com, since COVID kicked in and the pandemic happened and everything, you can actually access your credit report from each bureau once a week. They changed that for free. Now, it's just your credit report, not your credit score. So just something to keep in mind, a great way for you to keep an eye on your credit report as a whole.
I had no idea, Jen. Thanks. That's great information. That's very new. Positive credit. Positive credit will stay on your credit forever. So you make your payments on time, it will always be there. One of the things I look at when I review credit reports is you may have one trade, but I look at it and I see, wow, that person paid on that trade line really well for 39 months. And so it helps you regardless if it was from 10 years ago, 20 years ago, or 2 years ago. It's a positive trade and it actually helps your score and it helps your creditability. So do you have the ability to pay back the loan that you're requesting? So that's one of those things that we definitely look at when we evaluate a credit application.
And that's a really good point. What Janelle just said, if you had 39 months of great credit and paying back that history, showing that over the time frame, and then life happens, right? We understand that. So when you're talking to a financial institution about what's going on in your life, that's a great example of maybe you were laid off, maybe somebody in your family got sick and life changed things. You can explain that and have a conversation with them as you're applying for a loan.
Absolutely. Thank you. I'm going to turn this over to Vanessa.
Hi, my name is Vanessa Kavanaugh. I work at Sound Credit Union in our consumer lending department. So we've just learned about what's on your credit report, but now we're going to talk about how to get your credit report. So obtaining your credit report, how many of you have credit cards or loan products that you access on a mobile app? How many of you that have those products are able to see your credit activity on that app offered by your banking or loan institution? That's a great way to monitor those credit activities. Another way to look at that is through credit monitoring services like Credit Karma. Does anybody subscribe to that, use that tool? Awesome, I'm glad to see that. That's empowering yourself to know what's reporting on your credit reports. You can also go to annualcreditreport.com where you can get free copies of your credit report. Now keep in mind, this is your credit report, not your score. This is what builds your score or takes it down. So it's really important to view the accuracy of that. Did you know that there is 1 in 5 people that have inaccurate information on their credit reports? So that's why it's important to continue to monitor those things. So Jen did let us know that you could do this weekly. It's best to stagger them. You don't have to get all 3 from each bureau at the same time. Stagger them a little bit so that you can continue to monitor them. If you do not have internet access or don't feel comfortable putting your information onto the World Wide Web, we don't blame you. There's a lot of fraud going on. That's why it's also important to look for the logo if you do use annualcreditreport.com, not freecreditreport.com. That's going to cost you. There's a lot of spoof sites, so just make sure that you're following those links accurately, that you're hovering over them, examining that URL to make sure that you're not putting your very important information out there for fraudsters, because then you're going to find a lot of things that are inaccurate on your credit report, and we don't want that. You guys are working really hard to build your score and to open opportunity for yourself through lending needs. So as we talked about, that it's going to give you your credit report, not your score. You can pay for the score itself to get that information. You'll also get this information if you're applying for loans, because your score is what actually sets your rate. If you do find inaccurate information on your credit report, you do have the right to file a dispute. So that seems kind of challenging, but there are steps to filing a dispute. The first thing that you should do is contact the creditor or collection agency trying to collect that debt and reporting negative credit to you. This is the most efficient way. If you have their contact information to dispute that, you can ask them for what is reporting, when it was reported, and documentation on that. Then you can provide your documentation for it or dispute the validity of it with the credit bureau. So if you are unsuccessful in disputing this thing that's reporting on your credit report, you can contact the bureaus directly. They have up to 45 days to respond to this, so make sure that you collect all of your data and keep track of that and keep copies of it yourself, whether that's paper copies or electronic copies. You're going to want to keep that with you so that it makes that dispute process a little bit easier on yourself. If that dispute is still unsuccessful, you can file a complaint with the Consumer Financial Protection Bureau. So one of the things that you can see on your credit report, if you're checking that and you see, wow, this is absolutely not mine, you may be a victim of identity theft. So when we're talking about examining those URLs, that may be one of the ways that a fraudster has obtained your information. So if you see anything on there like excessive inquiries, I didn't apply for credit here, why are all these inquiries popping up? You may have received notification from places like Credit Karma or your banking apps that you hold loans with that do offer that service. You're going to want to contact all 3 bureaus and freeze your credit immediately. What that does is it creates a block so that they cannot apply for credit without the institution contacting you to let you know, like, hey, you applied for credit, we're not able to pull that, but that fraudster is going to be very discouraged by that, may not be able to obtain that or provide the information required or even lift that freeze. So this is very prevalent in today's world, so please be careful, watch your credit reports, because it just takes a matter of minutes, days, and it is a lot of financial stress on you because you're going to take time out of your day to dispute this. You're going to have to chase down. All these things get documentation. It is very emotionally taxing as well. So please be careful, monitor regularly. I can't stress that enough. In our field of work, we're seeing a lot of that right now. Technology is a great thing, but it also equips people who are not honest to do a lot of damage for people who are working very hard like yourself. So we're gonna talk here in a minute about after you put that freeze on there. I hope that doesn't happen to you, but this is also a great way for you to prevent anything like that. So if you do experience identity theft, so those banking apps we talked about where you hold loans, you might subscribe to a service, or they may offer a service to help you dispute those things, where they'll have advisors to help you with that, give you a checklist of things that you need to do, utilize whatever tools are available to you, get familiar with what services you already have available to you, and if there is a cost for it. Most financial institutions offer this, where you can pay a small fee to have this service for you. If you have something with identity theft, they can help you navigate this. As I said, it's going to take a lot of time. It's very emotionally stressful, but there are professionals out there that literally do this for a job, to fight those, to help you, to walk alongside you as you navigate this very difficult time. So I did want to mention that if you have anything that's reporting that's not yours with identity theft, or have heard of other people doing that, and if you freeze your credit report and you're looking to go apply for credit, you can ask for that to be lifted. Ask your borrower or your lender what credit bureau they use for that inquiry, because you don't have to lift all 3. Just be prepared ahead of time so that they can pull that credit. Once they confirm they pulled your credit, go ahead and put that freeze back on there.
So as we go through this, I think about things that have happened in my life or my family's life, and they love it that I use them as examples, but I do. So a great example, as we're talking about soft pulls and hard pulls, like if you're going and opening a checking account at a financial institution, that's a soft pull. It's not going to affect your credit score itself. They're looking to see if there's any inquiries out there or any outstanding balances, debts, collections, things like that. I think about my father-in-law who at age, I think 79, decided that he wanted to go buy a Corvette. And so he and my mother-in-law went and bought a Corvette one day, and they walk into the dealership and they decide they're not gonna pay cash, they're gonna take out a loan for it. And they ask for his social security number. He goes to a financial institution that he works with regularly. He's worked with them for over 50 years. He didn't think it was gonna be a problem. And they type in his social, and they're like, "You don't have any credit." And he's like, "What? She pays the bills every month." Well, yeah, but it's a credit card that's only in her name. not his. He hasn't had a credit card in his name in years. And so he has no credit score because there was no history to show anything. So just keeping that in mind, like some people may think that credit is bad, but if you're going to get a loan, you have to build credit. You have to have more than a checking account and be using that credit card and paying it off and utilizing those funds that have been allocated to you. Does that make sense? So how a credit score is calculated. So we're gonna go over how this all works. So there's a FICO score, which I'm sure all of you have heard about. Your FICO score can be between 300 and up to 850. 850 is the highest you can go. That's called A+ credit. And really, when you're looking at a financial institution, the likelihood of being able to get a loan with a higher credit score is good. It's going back to that example we looked at, the higher your credit score is, it's going to impact your the amount of funding that they can give you, as well as that interest rate, right? It impacts if it can be lower or higher. You always want the lower interest rate. So FICO score is the most widely used score that's out there. It's the scoring model that's used. So as Janelle mentioned earlier, all three bureaus have a different calculation. So you could go out and look at your credit score. Has anybody ever done this? Gone and looked at their credit score, and in one agency might be reporting, I don't know, 740, and another agency is reporting 785. If you've ever saw that, like I get very upset about that, but because I want it to be the same. I want to be consistent, and I want it to be very good always. And the reason is because they have different algorithms that they use. And then going back to what Janelle said is that not every creditor is reporting to all three bureaus. So Sound Credit Union, we report to Experian, and that's it. So your credit score may be different with a lender based off of who they're looking, which bureau they're utilizing for that. But there are a total of 5 different factors that go into your credit score. The most important, it makes up 35% of your credit history. And if you walk away with anything that we tell you today, this is one of the main ones, is that make sure that you're making your payments on time. And that history is just playing a huge part. Knowing that if you pay as Janelle said, all the good stuff will stay on your credit report forever. But if there's a negative, if you did not pay on time, if you incurred a late fee, if there's a collection fee, all of that shows up in payment history, and that's going to make up 35% of how they calculate that score. Accounts owed. So what they're looking at there is they're looking to see, do you have a mortgage? Do you have a auto loan? Do you have a credit card? How many credit cards do you have? How much are you utilizing? All of that's going to come into play, and it makes up 30% of that. So take that into consideration. Oh, and when we talk about that amounts owed, like it goes back to what I said at the beginning. If somebody gives you a loan for $1,000, we're not saying to go use all $1,000. Of course, life happens, and if you need to, yes. But if you're really working on helping your credit, using 30% of that at a time. So if it's $1,000, then only using $300 at a time, making that payment on time, paying it in full, all of that will benefit you. If you have, say you have a credit card that has a higher limit, maybe it's $10,000, and you're worried about paying it all back. One thing we've talked about in the past is, say you use all $10,000, right? But we report at the end of each month to the bureaus on what each loan has utilized for the month. So what we recommend, and this is what I do with my own personal, is because I like points. I want points. I want to go stay at Marriott's for free, and so I have a Marriott card, and I utilize that all the time. But I pay that monthly payment twice a month, because if I can lower it before it's reported that I might have used $8,000, then, and I pay $4,000, it's gonna lower it so it looks like my utilization is less, and it's also showing that I'm being proactive in making these payments. Does that make sense? So be careful with credit. it can really help you, but you have to be disciplined and you have to be consistent about making these payments and figure out how you're going to manage it so it benefits you. Yes.
Is there interval that you recommend to make those twice a month? Like, is it 3 days, or does it have to be like one in the first 15 days and then another in the second 15 days? Like, how is
No, nope. So, because we're just all reporting all at the same time. So it's your financial institution, they report at one time. For me, like, I won't use my checking account except for when I go to make my monthly payment. We don't use it at all, but I will, as soon as I get paid. So some of our bills work. My husband's check will cover housing and autos, right? But anything else I'll pay. So as soon as I get paid, I will make a payment on that credit card so that it makes me, and it's honestly, he doesn't even know I do this. It makes me feel better and I sleep better at night. Because I know that, okay, I paid this off and I can feel a little bit better that I don't owe more. And I've taken care of what needs to be paid. So I would just, it doesn't hurt to ask your financial institution, like, hey, when are you reporting to bureaus so that you know that, okay, if it's going to be at the end of the month, if I spend this much and I pay some on the 10th of the month, and then I make sure my payment's due on the 24th or whatever, so that you correlate with that. And they'll tell you, they should, because it's important to you and you want to know what's going on. You bet. So the length of credit history. So we would suggest, everybody's different, right, on whether or not they want to leave credit cards open. Some people are worried that, oh, it's going to show up that I still have this credit card. I have a Macy's card that I've had since probably 1995. And I still have the same one, and that history will go all the way back. I know I just aged myself. Thanks a lot. My teammates are laughing at me. But the history on it goes all the way back. And it shows whether or not I was consistent at making my payments, which when I was in college, probably not as consistent as I should have been. But the history's there and shows it. But I don't always use that credit card. But I want that good credit to come through. I will use it at least once a year, just so it shows that I used I think it's a $1,200 credit card that they've given me, that limit, and I will use it for like $100 and then make sure I pay it off right away, just because it's gonna help boost my score. And again, it's a competition at my house to see whose credit score is better. And Janelle knows, because she just pulled my credit for a loan that I just did. And her boss called me while I was on vacation and said, you can tell your husband congratulations on his 845 score, but let him know that yours is 846. And I said, thank you, I will. So, like, you can make it fun, right? And again, he hasn't paid a bill in over 21 years. So he's welcome. But at the same time, like, it makes it so I try harder and I care, and it benefits me because I get lower interest rates, but I'm also being really responsible with how we utilize that money. So credit history, I mean, it just depends. It can hurt you to close it. It hurts you if you close it, because then all the good history is gone. So just remember that. Yes?
Can having more credit cards hurt your score?
It can, because then and it depends on if you're utilizing it all, right? Or what also can hurt your score is like during the holidays, right? Or really it's any time of year, but we really hear it in the holidays when you go into the store, you're buying things. Hey, do you want to save 20% today? If you open a credit card, do you want to save 15% today if you open a credit card? If you open them all at the same time, it looks like you're almost like hurting for money. And they're also looking at the utilization of, if you're using all of these credit cards, is it because you don't have the cash to pay for things? So it can definitely implement it. Great question. So then that goes into the 10% of the new credit. So if we're opening credit cards all at the same time, or getting loans that are making creditors wonder what's going on in your life that's causing you to need all of this credit, that's coming into play. So like if you're looking to purchase a home, having your credit pulled all at one time and staying within a certain time, and these two can speak about this much better than I can, but they see the number of pulls. It's not your credit report. They're looking at the pulls, the hard credits that are coming in, and that can impact your credit score. So just keeping that in mind. Like, I know my score was good last month when I bought this car. It's probably gone down because I purchased a car, but it'll take a couple months and then I'll get it right back up. So new credit impacts you that way. And then the credit mix. So they're looking at the revolving credit. So looking at credit cards, whether or not you have an auto loan, mortgage, looking at all the mix of credit that you're utilizing and how that works. They look at that whole portfolio and take that into consideration for 10%, and that makes up 10% of that score. So that's your credit score factors as a whole. Oops. So we'll go over this real quick with Diego and Angela again. So we see that Diego has a credit card. His balance is $800. His maximum limit's $1,000. So he's used 80% of that score, that funding that's been given to him, right? He pays off his entire balance. Now Angela is at $5,000 that she's used, maximum of $10,000, and she's making a minimum payment. So how's this impacting their credit score? In this case, Angela's is better because she only used 50% of what she was given. Because he used $800, so 80% of that $1,000 that he was given, it's going to lower his credit score. Unless he did kind of what I was saying earlier, if he were to pay it off before it gets reported, pay a portion of it, a lot of people will make every time they use their credit card or weekly, they'll make payments on it. It just depends on what works for you. So just think about that. Even though she just made the minimum, her score was better than his was because she only used 50%.
I just wanted to point out with Diego, so when he pays his entire balance, let's say he does that before the end of the reporting period, so reports as zeros. Is this better? Yeah. So Diego, he pays off his entire balance. So when it reports to the credit bureau, let's say he does that right before the end of the month, it looks like Diego's not using his card. So it also plays into your utilization. So as far as the credit bureaus are concerned, they're like, Diego's not even using this card. He doesn't have payment history because they're not reporting balances. They're not reporting payments because to them it looks like it's a zero balance. He's not using it. So those are things to consider. So when you're talking about making your payments, if you want to make multiple payments, find out when it's reported to the bureaus, get it in that sweet spot for your ratios. And if you're concerned about paying off your statement balance, because Diego's not making a bad decision by paying off his entire statement balance, because then he's not paying interest. Now, that isn't always the case for us because life happens, or maybe we're making ends meet. We're having to stretch the dollar a little bit, but that's the point of like credit in some areas in our lives, isn't it? But then he can pay that other payment by his statement due date. So as long as that full statement balance is paid by your due date, you're not paying interest on that credit card. So that's something to consider. First payment gets it down to that sweet spot where it's looking at those great ratios. And then by the time that your due date is, make sure that entire statement balance is paid so that you're not paying that interest.
So how do we build credit? Or how do we rebuild credit, right? So there's two options here. First, we all start off with building credit. We have nothing on there. So what do? We look at getting typically a credit card. It is our easiest form of credit to get on your own. And that is because there's a lot of financial institutions that offer programs for consumers to start building their own credit. We as a financial institution, we want to build that relationship with you. So we start off typically by saying, hey, do you need a savings account, checking account, CDs, certificates, all of these things based off of just your consumer savings side of it. But then we look at how do we get you to build credit, because we want you to form these relationships with you and lasting relationships. I say that a lot because I've been with Sound Credit Union for 25 years. And so if I was to apply at Sound Credit Union, and I've had my account for excessive number of years, that's going to be in the ratio of my creditability, because I am with one financial institution, and I have been. I'm not financial institution jumping, going, oh, I'm gonna go see what this person has, or I'm gonna go over here and see what this person has. So I really, really, really speak very highly of establishing your savings account, your checking account, anything that you might need for your saving purposes, and then working with that financial institution to see what they have to offer you to build credit. Let's see, we start by reviewing your financial goals. What are you looking at doing? Are you looking at buying a house? Are you looking at buying a car? Or are you just looking to get a credit score? All of these things are important. I just had a friend come to me, called me at work last week, and said, I'm buying a house in January. And I said, you are? Don't you need to get a credit card? And he goes, well, I have one. I said, you have a $500 credit card. You've had it for 3 years. I've been telling you for years, you need more than this $500 credit card. And he says, no, that should tell you that I'm good. I don't need credit. And I said, no, you definitely need credit. And I tell you what, if you go to buy a house in January, then you're not gonna get an approval. So we started with, what can we do now for this person? Because he had a $500 credit card established for about 49 months. And so we looked at, I told him what he needs to do is apply to do a line increase. Let's increase your limit. Because like Jen had mentioned earlier, the longevity of the credit card is what matters, right? That is a big percentage of the score. So because he had it for 49 months, I'm like, you don't want an additional card, you want to increase this limit. So he applied and was able to increase his limit to a $10,000 credit limit immediately, just by having a good credit score. He had a credit score, I believe it was about a 720 credit score, had a good job, had verifying income, and had an established account with Sound Credit Union for many, many years. And so we looked at him as a very low risk, and due to all the ratios, his monthly income and all of that combined, we were able to give him a 10,000 limit. And I can tell you what, this will increase his score significantly in about 3 months. Will it look better for him to buy a house in January? Probably, but he'll need more than one trade. So I encouraged him to maybe do a shared secured loan, which we'll talk about here in a little bit, just to get another one. He said, I can go out and buy a car. And I said, do you need a car? He said, no, but you told me I just need a trade. I said, but do you need a car? So there's many options you can get. Don't just think, oh, I could go and do this or do that. You know, really think about your financial goals and what your intentions are. Credit cards, like we talked. Credit cards are the #1 way to build your credit score. They're easy, they're low, and here at Sound Credit Union and many financial institutions, we have programs available to build your credit or rebuild your credit. They're called starter visas typically, and anybody can get them without a credit score. We typically request that you have employment for at least 6 months. We look at your employment or your housing. Where do you live? How long have you lived there? Because if you have only been there a month and only been at your job for a month, is it really, really, really necessary to give somebody a credit card that's only been somewhere for about 1 month? Probably not the best financial move to offer that person. But if they've been at their established residence for some time or their job for some time, it's like, yeah, let's look at giving this person a credit card. So then there's secured credit cards. What's the difference between a secured credit card and a credit card? A secured credit card is financed by your own funds. So a secured credit card is typically used for anybody that does not have a credit score, that maybe just was told by somebody to apply for a secured credit card because they were unaware that we actually have starter visas for consumers with zero credit. Or you maybe have some sort of credit or a collection on there, and you need to rebuild your credit. This is the #1 way to rebuild your credit, is to do a secured credit card. So I have told people for years, like, you know, I need a credit card. I'm like, or establish my credit. I need to reestablish the credit. So I'm like, okay, you know what? You get paid on Friday. Bring me your paycheck, or come in on Friday when you get your direct deposit, and let's pull out 500 of that. Let's hold 500. We're not going to take the money out of your account. It stays in your account, but we pledge it in your account, and then we offer you a credit card. The risk is very minimal to the credit union because we're holding your funds. So in the event that you don't pay for that secured credit card, we do have that right to offset that balance and to pay it in full. So we're not necessarily going to let you get bad credit on it, or we're not necessarily going to lose any money and take a risk by a secured credit card. So typically you're using your own funds. Secured loans. What's a secured loans to a credit card? There's no card attached. So this is the one I really, really like to work with people on. So if you were to bring me $500 on Friday, I'm going to turn around, put that $500 in your account, I'm going to hold it, pledge it, and then I'm going to offer you a loan for $500, and I'm going to give you back $500. And then we're going to set up terms and a monthly payment that is based on what you can afford. So if you want maybe $100 payments, then I'm going to set it up so it's paid off in less than 4 months. If you want $25 payments, great, let's set this out to 40 months. It's your funds, your payment. A little bit of time. Okay, we're running out of time. So we want to really, you really want to pay attention to the secured card because it really, really helps you and it builds credit. Many, many people use secured loans when they have a credit score and they have lots of money in their savings. They just don't want to borrow money. They want to use their own money. When you use secured credit cards, you're still earning interest. So we don't take that money out. Get a cosigner. We've all heard that, right? Get a cosigner. Who wants to cosign for anybody? I definitely don't want to cosign for anybody. It's a risk, and it's a risk for both consumers. It reports to both people. So if I had my mom cosign for me, I miss a payment, my mom's credit score is being affected. My mom may not be able to refinance her home because I decided to pay on some payments late. Become an authorized user. An authorized user is one of the easiest way to get a credit score. So I have an established account. I have a daughter. I can add her onto my account as an authorized user. She's not responsible for that bill, but now she's going to be an established user. It does report that she is not responsible, but it is a trade line, and it actively gives her a credit score and credit history. Common credit myths. I'll let Vanessa.
Okay, speed round. So you've gone to Best Buy, you've gone to Ulta, and you've received that 20% off. And now it's collecting dust in your wallet because you realize those are kind of a spendy, and I only want to do that around the holiday time. So now you've got these little piddly credit cards sitting around, you're not using them. Remember we talked about how you're not using it, it's not showing any payment history. Is that card really doing you justice at that point? Probably not. Now, if it is your oldest trade, I would recommend hanging on to it. My JCPenney's card, are they still even around anymore? But they are in my wallet, so once a year I do go there, make a couple purchases, pay it off so that I don't pay the interest because it's a really high interest rate, just like your Best Buy, your Ulta card, wherever retailer you opened it. Just consider those things. Is it really something that's helping you or is it something that's harming you? Number two, we talked about getting your credit report. If it's a soft inquiry, like you're doing with Credit Karma, or if you're requesting that from annualcreditreport.com, that is a soft inquiry, doesn't impact your credit. But now if you're going shopping and you've said, yeah, Ulta, I want to save 20%, Best Buy, yeah, 20%. Well, now you've got those hard inquiries because they're checking your credit to see if they actually want to give you that credit card. So that will harm your score. So again, just making sure you're sticking with those ratios, that you're not holding onto cards that you're not using. That also leaves you open to theft as well. So let's say you put that card down somewhere in your house or you have it just sitting somewhere, you're not using it. Are you really going to notice that it's gone? What if you misplace that? I guess you might find out when you're doing your credit report and you go, oh my gosh, I didn't make that $600 purchase. So now you've got your work cut out for you. So just make sure you're utilizing all those things, closing things that you're not using, not opening a bunch of things if you really don't need to use them. A lot of your financial institutions offer credit cards that don't have annual fees. That's the other thing to think about. Should it cost you to carry that card in your wallet? So it might make more sense for you to just use the card you already have instead of open a new one. 20% is pretty attractive, but if it's an impulse purchase, maybe that'll slow you down a little bit too. You don't need to make that purchase. Keep money in your savings. Make sure you pay yourself. But anytime, please reach out to Sound Credit Union. As a member, we love to support our members, make sure that they're supported, empowered to make good financial decisions. Also reach out to any of your financial institutions as well to make those good decisions, to go over those things. Because as lenders, we want to make sure that our borrowers are in good condition. But thank you for your time today, guys.
Thank you, everyone, for attending today, and thank you to Sound Credit Union and their expert team here to actually share their experience. They are going to be sticking around for a little bit if you want to come down and ask them questions, and so please do that. I encourage you. And before you leave, I ask that you fill this out. If you don't have one, Sally in the back is holding it. This is a post-event survey. It helps us to improve how to improve these workshops, and two, also we want to hear from you what kind of personal finance topics are important to you. So again, thank you very much.